It is a very good morning and welcome to SlyMedia TV. Welcome to the Economic Pulse. This is like we promised last time that we're going to be bringing you a program that deals with the economy, that looks at the economy so that we understand where our economy is going, what is happening in our economy. And the Economic Pulse is there to do exactly that. We want to check the pulse of the economy. My name is Prof. Let me say to you, our viewers, go ahead and share our page, like our page, follow our page, so that you don't miss the programs that we bring you here. And also go ahead and contribute when you send in your comments, questions, and any issues that you think we need to talk about, any gray areas that you may have. We're going to be reading those questions and comments and allow panelists and guests that we'll be having here to respond to those questions and comments. This morning, we are continuing with the discussion we started last month, the discussion on the economy. Last month, we were focusing on the runaway rate and runaway inflation. But we are going to be looking at slightly a different issue today, or different issues today. We want to look at the performance of the economy and say, where are we performing well? Where are we not performing well? What is the problem? How can we fix those problems? So to help me deal with those questions is a professor of economics at the University of Zimbabwe. And he is an author of quite a number of books, economics books. And he is Professor Gift Mugano. Welcome once again to the program, and welcome to SlyMedia TV.
Thank you, Perfect. Good morning, Zimbabwe.
Before we go into our issues, let's take a short break. When we return, we're going straight into those issues.
Big businesses do not advertise because they are big. They advertise because they want to reach potential new customers. Advertising helps you move your goods off the shelves. Brand visibility engraves your brand in the hearts and minds of your old and new customers. SlyMedia TV has a package for everyone, big or small. It's called Everyone Can Stream. Corporate events, weddings, churches or funerals, we stream it all. We take your product and event to over 326,000 followers on Facebook and 96,000 subscribers on YouTube. We cross-post to over 6 pages with a reach of over 1 million followers from as little as $100 per hour. We give you the desired global reach. Call today for a free quotation. 263-772-863-484 or 263-775-964-849 or 263-773-761-800 or email on slymediastreaming@gmail.com. SlyMedia TV, building bridges.
Welcome back to Economic Pulse. Welcome back to SlyMedia TV. Like I said before we took a short break, we said that we're going to go straight into the issues with Professor Mugano. Last time when I had Professor Mugano on the show, we spoke about inflation. We spoke about what needs to be done to ensure that we deal with inflation, we deal with the runaway forex exchange rate. And he told us, or he spoke to us about quite a number of issues that we need to do as a country to ensure that we deal with those issues. Let's start there, Professor. We want to find out from the last program we had, the developments that have taken place so far. We have seen the rate going past 400. We still are dealing with, someone was talking to me over the weekend actually saying that there are shortages in some supermarkets of some commodities. Let's start there, a recap of that.
So if we were looking at this economy as a patient, last time when we met, I think 3 weeks ago, that patient was in a normal ward in the hospital. But today, the patient is in the intensive care unit and life support. Because along the way, between now and 3 weeks ago, the medical doctor who came to cure the patient gave some poison to that patient. So the patient is now in the intensive care. Of course, as we continue the program, we will unpack what kind of poison was injected to this patient called Zimbabwe. But I think there was a fundamental question which you asked last 3 weeks ago, where you were saying, does government listen? And I consistently said that our government does not listen to advice. What happened, I think, on the 7th of May over the weekend, when the president announced measures aimed at stabilizing the currency and restoring confidence, it's a clear testimony that the government machinery does not listen. When we met, the rate was around 350 Zimbabwean dollars against $1 US. But now, within less than a month, we are hearing a rate of $450, starting from 420, 430, depending on which market you go to, now to $450 against $1 US. What it tells you that there's continuation of rot in the economy. Yeah. So that is what is happening within the economy, and I think we have not made any progress. In actual sense, we have regressed going backwards. Yeah, that's unfortunate. Yeah,
it's just about 3 weeks.
It is
when
3
we're
weeks,
talking
yeah.
about these things, and you say there is a movement from normal ward to ICU.
Correct.
In 3 weeks.
In 3 weeks, yeah.
Where are we going?
We are going to the graves. When we are in ICU, we are going to the graves. And there's no return. Unfortunately, the patient who is in the ICU, the very same doctor who has given the poison, is not even aware that I've given the poison. He's continuously giving the poison. You see what happened during the weekend? The Minister of Finance announced measures to open the borders, floodgates of imports, to finish the industry. So I'm sure our viewers, as we continue, will go back to go into detail about what was announced by the president and what was announced by the Minister of Finance. So why I'm saying we're going to the grave is that you don't put measures which are killing the economy. For example, suspending lending as an example. You're putting poison in the economy. And then you follow it up by opening up floodgates of imports. So you think you recover from the ICU. You are going to the graves. So we are going for a total collapse of the economy.
We're going to talk about that in detail, but let's now focus on what you would say is the current situation in our economy, a rundown of the current situation in our economy, the performance. Like I said, that we want to check the pulse of the economy.
No, thank you very much. So the current situation of the economy is manifesting as follows. One, we have a runaway exchange rate. I'm very convinced that when we get inflation figures end of this month, will be above 100% because the pressures are sustaining. You have seen the prices now coming out today, and even last week, we are seeing price of sugar going up, price of cooking oil in US dollars, almost doubling the price of commodities in US dollars. And why is that happening? There are a number of factors, internal factors, which is these policy measures, which will go into detail about, and I think it's only fair that we give it its own time to go into detail about it. And also external forces like the Russian-Ukraine crisis, where the price of fuel has gone up significantly and fuel is used in production. And clearly that pushes also our local prices to go up. So inflation is a big issue. Then the exchange rate also is running away. Just like what we made last time, it was 350, now it's about 450. And it's not going backwards, it's going upwards. We have incessant unemployment. Jobs are being lost every day because of the disruption which has already happened in the economy after the president announced these measures. We also have structural challenges, with supply-side constraints, particularly if you look at the agricultural sector, where drought this season, which we've just come out of it, and we have shortages of maize. We are hearing government saying that we've lost around 43% of the grain to drought, which means we have quite a gap in terms of our cereals and food security issues. Of course, viewers would want to know that we have massive distortions in terms of the exchange rates. And the problem is that when you have three prices for one commodity, you have a casino economy. Because one will get money from the auction at a lower price, which is $1.73 against $1 US. But there's a market for that money at $450. So no one will go into production. You just move from the bank and you are in 4th Street, you are changing the money. So we are now becoming an economy trading in currency. And that is very dangerous because what it does, it put production on hold. Because why would you go to production where you take 3-4 months and getting headaches when you can just change the money overnight? So those are the challenges which we are facing. But on a positive side, we have a current account surplus and our exports are doing very well. Yes, that is a fact. In fact, the first quarter exports has just shot up, I think, by more than 15%. I think the major driver there is attractive prices on the global market, particularly of precious metals, your gold and your platinum. And that's quite positive for us. We also have fair management of money supply by central bank. I don't have any challenge with Dr. Mangoja's committee and team at central bank as a central bank in terms of managing money supply. I think they've done very well where you see money supply growth per quarter has been around 5%. Where I have a challenge is the Ministry of Finance, which has become the central bank, where they are printing money and funding construction work, which we talked about last time, and the agricultural sector. And those two.
So you're saying there is conflation there between the fiscus and the money?
Yes. You can't blame central bank for the money supply, which you are seeing, because if you look at the reserve money, it's about $28 billion. It has nothing to do with the current dynamics happening in this economy. You have your 450 billion RTGS, which Minister Mtuli Ngove is splashing into the economy by paying contractors, by paying players in the agricultural sectors, and now he's even promising to pay them in US dollars, which is fair and fine. So he's the one who is pumping money in the market, and he's got a problem with that because you need a market-led economy in agriculture where the commodity exchange is financing production of grains and also marketing. Government is out. So he's pumping $116 billion into agriculture this year before he based the budget. And you are guaranteed he will pump more than $200 billion this year because normally he based the budget in agriculture by 100% actually. If I look at last year's performance. Now, in construction as well, he's going to be pumping $334 billion before he busts the budget. And his experience and his past performance has been investing these budgets. But before we talk of besting the budgets, he is actually spending $450 billion, which is going to the black market. But you expect him to do a supplementary budget by June, July because of the Ukraine issue, because the inputs costs are going to be going up by 100%. So he can't maintain the same budget when the assumption have changed. So that is where the challenge is, which is driving up the rate. And if government does not change the funding model of the construction work by going to long-term finance and also allowing the market, the value chains, contract farming, to take care of funding for agriculture as happening in tobacco, who will continue to sustain the pain which we are facing today.
So what is the role of the RBZ in all this? Because you're saying that the money is being pumped from the ministry.
The role of central bank has been now assumed by Minister of Finance because central bank should be managing money supply. So if they can't manage money supply, and the Minister of Finance is now managing it and actually by pumping money, it means central bank's role has been is now being constrained to its role by Minister of Finance. They can't do anything. In fact, in one Mandela Policy Committee statement, I think it was in 2020 November, end of November, it was 28 November actually, 2020. Mandela Policy Committee issued a statement to say Central Bank, Minister of Finance must stop pumping money in the economy. It's on public record. So they actually admit
that it's happening.
It's happening. It's on record.
From Treasury.
Yeah, it's from Treasury.
Okay, let's move on. You have spoken about the poison, the patient, and in that analogy. Recently, we had the president announcing some measures meant to stabilize the economy, meant to stabilize the forex exchange. As an economist yourself, how do you look at this? What do you think about these measures?
All right, thank you very much. So, the key measures which has been announced by the president, all of them, are clearly poison to the economy. I think let me start by that headline, so that the listeners and the viewers will understand the major byline on this subject. Let me start with the lending, suspension of lending. You know, I have not heard this, and it's not something which any government should desire to do, to cut off lending to the private sector. You know, banking is a very simple subject, which one can look at a personal level. If we play with the money every day as individuals. We are doing banking, even if we are not doing the conventional banking. Yeah. So assume as a person, your income, the income which should flow to you is cut off. How are you going to live? So if you look at it as a person, your salary is not coming, any money coming from friends is not coming to you, how are you going to live? It's good. That's the same question which you must look at when you are looking at business, to say you suspend lending and loans advanced to business, including those overdraft drawdowns, and you expect the industry to continue to function. So what has happened now is kind of cutting the stomach, because in finance we say finance is the stomach through which the rest of the economy feed from. So if you suspend lending, you are removing the stomach. So you are living without a stomach. It means you are going to die. So what are the implications? Now, if you look at central bank figures of, let us look at 31 December 2021. $250 billion has been issued out by banks for honored advances. And 76% of that money had been given to productive sectors, with agriculture with about 28%, distribution with about 10%, mining 6%, financial 6%. Those were the major beneficiary. And we're talking about production. Right. So that was $190 billion out of what? $250 billion. And the argument by the president and his team is that the monies which are being given out are being used for speculation. But the record of central bank, which central bank governor cannot deny, shows that 76% of that money, and that has been the trajectory, is 76%, 75%. If you follow the pattern, it goes to production sector. Now, 20% goes to consumptive sector. And that is $50 billion out of $250 billion, because there's 4% which goes for other advances. Now, you can't say that when 20% goes to consumptive, it's 100% going to black market. No, because it's money which you can get as a person to pay school fees. You're not going to be buying foreign currency. It's money which you can get to pay for your furniture, or you're building a house. You just want to meet some expenses of maybe fuel and everything, or cement. So that money, even consumptive, is clearly consumptive, which is production oriented, because it's demand is going to be driving production. So there's no evidence, and I want to repeat it. I would want the Minister of Finance to sit here and show us the evidence how this money is going to black market when 76% is going to production. That is why you saw those letters which are coming through now, companies, when they are saying, we can't give you advance payment to the sugar industry. We can't give you advance payment to the beef industry, because our source has been cut. It shows you where the money was going to. And you still see government sticking with the point to say, we are trying to curb speculative borrowing. Where is the speculative borrowing? I've told you that the money which is going to the market, and you heard the governor, central bank said, if the tank is overflowing, you close it. Well, Mr. Governor, you closed the wrong tank. But the tank which is supposed to be closing is government. Because $450 billion right now from government is going to construction and agriculture. That is the tank which is overflowing, not the one for the private sector. So that point alone, that policy measure alone, what are the implications?
Yes.
So the implications are quite multifaceted. The first one, you look at your serious disruption to production because you've cut off lending, which was sustaining production. Remember, we're coming out of COVID-19, and the companies don't have right cash flows. So they're basing on what? On money from the banks. And also banks are pouncing on any flow into the account, because when you suspend immediately the drawdowns on overdraft, it means the ability of the borrower to pay back that overdraft is constrained. And the banks have to manage non-performing loans. They have to pounce on any money coming into your account. So it means automatically you are out of business as a company. So what are the macroeconomic effects of this measure? Immediate one is company closure, insolvency, job losses, shortages of commodities, which we are already seeing. And when there are shortages, two things happen. The first thing which happen are price increases. Because when there's a short supply of a commodity, immediately the price goes up. That's what we are seeing in the shops. And when the prices are going up, what happens? The economic agents begin to import. They are importing, and also the players at the other side of the border, Zambians, South Africans, they see opportunity. They are now ramping up production to supply to Zimbabwe. But before even this thing happens, what the Minister of Finance does? Over the weekend, he gives an announcement to say, we are opening floodgates of imports. Anyone with free funds, go and import. So it's actually, that's the first point where you're asking to say, so this person who is now in the intensive care unit, who has been given poison, is he going to come back? How does the person comes back when already the Minister of Finance is saying, we are now opening floodgates for imports to come and finish our local industry? So I have been dealing with one point. This is the major pregnant point from the president's pronouncement. But yeah. So, but the other one also is that.
Before we go to the other one, we saw again from the RBZ that it's not every sector that has been banned from borrowing. There are other sectors that are allowed to continue to borrow. I think basing on the reasons that you have been given from government, that is for speculative purposes.
That's where corruption starts. How do you say it's not every sector? This one now are selected. On which basis? You need to have laws which are fair to everyone, right? And if you look at the central bank's reports, I've said 76% of the money is given to productive, right? Out of that 76%, now we bring it to 100%. 10% is going to distribution. 28% is going to agriculture. 6% financial service, they are lending each other. Also 6% to mining. So this, it tells you that out of 100%, 72% are other sectors of the economy, which he's not speaking about. He's now saying certain tradable commodities are not being touched. But agriculture is not only tradable commodities. Remember, agriculture is diverse. It's plantation. Agriculture is the livestock, it's poultry. Are you with me? So even if you select few commodities, tobacco and sugar, those tradable commodities, that's not agriculture. It's a narrow way of understanding agriculture. So it doesn't address the challenge which you are facing. Are you with me? So what I am simply saying, let us look at the distribution of loans and say, even if you give a waiver to these three commodities, is it going to address the chaos which is coming in the economy? And also understand that even if you want to give the whole agricultural sector, services sector, the distribution, which takes 10% of the loan, we will not be able to service the agricultural sector in terms of transport and logistics.
Yeah.
So you produce your items, they will stay at the farm. So that the economy is very complicated. It's not something which you talk about like you're talking about a tuck shop. It's a system. You can't disturb your heart and you think you're going to live because your nose is okay, your eyes are okay. That's what they're trying to do. You die because the heart has been killed. The heart of business is distribution, as an example.
Yeah.
But there's also, you need your ICT. You need the mining. You need the commercial sectors, which is taking 6% as well, the hospitality sector of the loans. So there are significant shares of the loans which are being taken by and you are suspending it. Where have you ever seen government suspending lending? Honestly, and you say you are drafting regulations. Why don't you draft regulations when it is working? Did you begin to know that there's a challenge today and you suspend? So these are the real issues we are talking about. And this is what which I like to say, because I am an economist, and I like to speak about what I understand, what we teach at the university, and teach governments that what they are doing is wrong.
And let's touch on the issue of speculating, because it's one of the major reasons given for these measures, to say people are borrowing, then they take the money to the black market or parallel market, do whatever they do, which pushes the exchange rate and inflation.
You are raising a very pertinent point. But I left one point which I'm now happy you just follow up.
Yeah.
Do you know the biggest demand for foreign currency in Zimbabwe are not imports? When we did economics, and when we even teach economics at the University of Zimbabwe, you don't see anything in the textbooks of economics where the biggest demand of foreign currency is demand for value preservation. There's nothing like that in the books of economics. So we are rewriting history of economics as Zimbabweans to show that the biggest source of demand for foreign currency is value preservation. So it's not even the banking sector. So when I get my money as a person, and even you, and even anyone, whether it's in ZANU-PF, it's in CCC, there are no angels. Anyone who gets money, the first thing is to preserve that money. There's no Zimbabwean who is right in his mind, who keeps the money in your mobile money payment platform or in the bank because you're patriotic. Immediately you change it into US dollars because you want to preserve, to store value. That is the biggest demand of foreign currency. Now imagine, let me give you numbers, that in the informal sector, the last study which was done by World Bank in 2012, before the informal sector was big, that is the last study which was done. We had 5.7 million people in the informal sector. 5.7 million. So let us use that number, which is very low now. Because now it could be around 7 million people. They are changing money every day. How many banks do we have? How much capacity do they have in terms of changing money? And you know that the informal sector is over 80% of the economy. That is where the problem is. And those people don't listen to presidential announcement. They don't know it. They don't care. They are changing money every day. So those are the people who are driving the rate. That is why you see the rate is continuously going up, because they are going to buy money, foreign currency, to preserve their currency. Those people in the black market. Are you with me? And the government has no capacity to arrest them because the jails cannot accommodate those people. Number two, you can't even see them because they are changing when they are seated in their house. And you have even the central bank has no capacity to see who is doing illicit financial flow. There's no know your customer, know your clients in that market. So we are wasting time looking at putting controls to control 20% of the economy. Yet 80% is in the gray economy, which you have no capacity to deal with. Are you with me?
Yeah.
So I want the government to understand this, that they are dealing with the 20% of the economy. And now that 20% now is being punished for advancing loans to production. And I've told you, on average, 75% of the loans which are going out to business are productive. And around 20% is going to consumptive. In that consumptive, it's not 100% which is going to black market. But clearly I can tell you without any shadow of doubt, yes, in that 20%, there are some culprits who are changing money as well. But do you burn the house because there's a rate? Or you put a trap to catch the rate. So what the president, under the advice of his cabinet ministers and his strategist, was to say, bend the whole heart, because there's a rate which trouble us at night when we are asleep. You put a trap.
Yeah.
And what is the trap? That's where you use know your customer, a financial intelligence unit, to see those people who are getting money for black market. But I don't want us to focus on arresting people now.
Yeah.
Because I have told you where the problem is. It's bigger out there in the black market.
Yeah.
We need to deal with...
And I wanted to follow up with that, to say the gray economy that you spoke about. And you say that the government doesn't have capacity to really deal with the gray economy.
Correct.
As academia, an academic yourself, what will be the issues that this government must deal with to ensure that at least they tap into that gray economy?
So first and foremost, you need to understand that the best way to deal with any market indiscipline is to take away the distortions which are in the market. And the distortion starts by having first 3 exchange rates.
Yeah.
So you must have 1 exchange rate. So you must go for a market-led economy, liberalize the exchange rate, float the exchange rate, so that there's a 1 price for 1 commodity. You can't go to a shop and you see 3 prices for bread. So it means you are going to be causing shortages, because someone who has got the power and control of that bread is going to keep it and create shortages and buy it at a lower price and sell it at a higher price. It's very basic economics. But if the price of bread is just 1 price, who is going to keep that price and hide it and sell it for someone at a higher price? So you are creating what we call in economics arbitrage opportunity, where someone buys something at a lower price and sells it at a higher price. Now, that's the first thing. So we need immediately, that's very easy, liberalize the exchange rates, go for a floating exchange rate if they want to maintain Zimbabwean dollar. Right. Now, then we have 1 price. So no one will fight to exchange this money. Now, then the second issue, the bigger elephant in the house, is production. Because we are having drought of production in this economy. We aren't being productive. That's why everyone is now doing kia. We are fighting for survival. That is why you have the informal sector. The informal sector has been enlarging every day. Now you are asking people to import commodities, right? Yeah. As Minister of Finance. So you are expanding the territory of the informal sector, because you are actually finishing the business. You are closing. This is disastrous. It's going to see companies closing, pushing more people into the streets. So you're expanding the territory of the informal sector.
You know, Prof, I want us to then deal with that issue separately and exhaustively. Correct. Because we are going to look at the impact of the pronouncements by the ministry. But you say that we have a problem of production in this country. And here's the government saying that we're giving, or we're putting more money into production and the productive sector. Then you have a problem with it.
They are putting money into production sector, into agriculture. They are putting money into construction. That's very true. Yeah. But what you must understand is that are they the right people to put money into production sector? Is it the right model they are using to put money into production sector?
Let's talk about
that. The business of government is to provide a conducive, a regulated business environment. The business of business is business. Business does business. Government does not do business. Yeah. So how does government encourage production? You create a level playing field for everyone to do business. You don't go into command. Do you see, the command is not productive. You know why? Because government comes in and they put the players in the value chain, particularly those who are into milling, for example, as observers and spectators. Because they are the one who are giving inputs to farmers. And if I have my company, Mugano milling, as an example, I have no capacity to go and contract workers, to farmers, and give them inputs and charge them finance cost, charge them admin cost, and having that normal contract farming. Because the same person is being given something for free. The same person is not going to be liable for the same inputs. So we've disabled the role of business to fund production, and we come into the cash to fund production of maize for milling industries, for big milling companies who are able, as if they are not able. And then you say, we have done the maize for you. Here it is. Then they take it and mill it. Does it make sense? Or you should just say, you work on the contract laws, legal frameworks, to make sure that the one is being contracted is not being exploited. The one who is also contracting is not going to suffer from side marketing. You fine-tune the laws, and then they work alone. They release their money to fund a production. Then you also close the tape on lending. For the same productive sector, and you're saying government is doing production. Which production are they doing? Are you not aware of the same fertilizers the government is giving? They are buying at $60 a bag, right? And they give to people in communities. In those communities, the bags are being sold at $10 a bag, $12 a bag, because people want cash.
The same bag.
The same bag. The bag they buy at $60. In the communities, they are selling it at $10, $12 a bag. Are you not seeing the news reports where people are being arrested? That they were arrested with the fertilizer, command fertilizer. So what are we doing? So there's an inefficient use of resources, and we don't have production. Right, so the results are very simple. Why are we struggling with food security? If we were eating tobacco, why are you going to be tobacco insecure in this country? From 2000, we've never struggled with tobacco, because there's no government. It's clearly a market-led economy where companies does contract farming and they sell it at a commodity exchange. There's no GMB at all. Now, do you hear what GMB is saying? You must, once you harvest your maize, you must make sure you sell it to GMB within 2 weeks or you'll be arrested. There's a statutory instrument that effect. The very same GMB knows that you cannot sell maize to GMB if it doesn't have at most 13% moisture content, and they are compelling everyone to sell maize to them, to force them, because they have nothing in GMB. And those farmers, are they incentivized to deal with GMB when they are being harassed like that? And when they send their maize to GMB. We
just saw the cabinet increasing the producer price some 2 weeks ago. Is that not incentive?
You are increasing the producer price to make sure that it is above $360 a ton, right? And in the region, it's about $190 a ton. If I am a milling company, private sector for that matter, my job is to make a profit. Do you think I'm going to support contract farming to buy maize at $360 a ton? I would rather wait for shortages. Now they are now saying they were opening floodgates. And I go and import it at $190, I lend it here at $270. I can make profit than to buy it at $360. I produce cornflakes, right? Once I produce those cornflakes, I have to export them to the region, to Zambia, where they are selling it $150 a ton. Am I going to be able to sell my cornflakes in Zambia? So you need to understand the business. So, Avishandi, it doesn't work.
Okay. Avishandi, we are going to come back after this short break, and we are going to deal with the issue of importation and the pronouncements made by the Minister of Finance to that effect. Let's take a short break.
Rising from the ashes, our Zimbabwean celebrities have paved different paths to be the people that we look up to today. Role models, opinion shapers, and motivational figures. All of them have a story to tell. SlyMedia TV presents On the Set, a show dedicated to showing you where celebrities came from and where they aspire to be. No matter where you are, local or international, we are willing to share your story on when you rose to fame. So contact us on 0772 863 484 or 0715 015 575, and make sure your story is well known worldwide.
SlyMedia TV, building bridges.
When you think of having the best, world-class, hassle-free, corporate or personal events, Think Real Sound, offering a wide range of products and services with different sizes for LED and TV screens to suit different occasions. There's state-of-the-art PA systems that give you real sound. When it comes to event lighting, Real Sound is the best, not to mention the Sparkles machines. Want to appear in another planet? Try the cloud and smoke machines. There's also top executive furniture for corporate events. For all your virtual meetings, look no further. Get in touch for a free quote for your next event. Contact Real Sound via email or phone number. Real Sound, just passion.
Welcome back to Economic Pulse and welcome back to SlyMedia TV. My name is Perfect Longwani, your host. And like I said, on this program, we are checking the pulse of the economy to make sure and understand how the heartbeat is moving in the economy. And I have Professor Gift Mugano, who is helping us understand issues around economic performance and what we need to do as a country. He is a professor of economics at the University of Zimbabwe, and he is an author of numerous papers on economic issues and also 3 books. He is a renowned economist. Professor Mugano, when we took a short break, we were dealing with the issue of import and imports that the Ministry of Finance spoke about, to say that now people can import basic commodities. Let's talk about that pronouncement on its own. What does it do to our economy?
Thank you very much. So, the starting point is that the context to which this policy is announced is wrong. There are allegations that business is sabotaging the economy because now there are shortages. So I want to unpack that for government to understand, because we need many voices, then they can choose what is right, what is wrong. So the real reason why we just had a sudden abrupt shortage of commodities and price spikes is because government suspended lending. When you suspend lending, you are cutting my lifeline as a business. I cannot continue to finance my raw materials, my supply chain, and I am on a standstill. And I've already given you similar analysis to say, those who were on overdraft drawdowns, once it is cut, any money coming through is being taken out. It means I'm out of business as a business. And when you have a shortage, when the companies now are struggling, their raw materials are running down, and also there's also the auction system, where companies have got monies which has been taken by central bank under the, when you are given money allotment, when we allocated money before it has been released, that RTGS already is taken.
It's taken.
So that has been also disrupting the whole supply chain. I'm saying this because I want the government to understand this. So when they are dealing with this, they have comprehensive solutions. So that is what has taken us to where we are. And when there are shortages, it means price goes what? Up, because it just becomes natural.
Yeah.
Now, the Minister of Finance has taken it from an emotional point of view to say, we are being sabotaged, and he thinks it's temporary. He thinks business will release its stocks and be able to then fill the shops because they will be afraid of the foreign competition.
But do you think there is sabotage there?
There's no sabotage. That's what I'm telling you. There's no sabotage. When you suspend lending, you have suspended this flow of funds and raw materials to the businesses, and they just become abruptly stopping in their production, right? So there's no sabotage. So he thinks it's temporary. He thinks someone is holding stock. That's being myopic. No one is holding any stock. They're actually holding keys to close the offices and go to the rural areas, going home. So this decision which is taken is going to just, that person in the intensive care unit, they're now finishing now. They're now killing the person to bury the person. Instead of giving oxygen to the person, you are giving more poison. That's what they are doing. So we are going to see South Africans' products. Remember, they are opening up. They are also reducing duties to make them very, very, very competitive against our local products. Are you with me?
Yeah.
It's killing. We're killing ourselves. I don't see any minister, any cabinet minister who does that. If you want to create jobs, If you want to create a middle-income country, Vision 2030, this is against all those tenets. So we are going to see cheaper products. I've told you last 3 weeks that we can't compete with the Zambians because we have a high-cost business environment. Now I saying the Zambians, now we are even removing the duties. Now we are allowing anyone with the free funds to go and import from Zambia. So we are accepting that we don't want any industry in Zimbabwe. So we are going to see more foreign products occupying the shops. Our Minister of Finance is becoming a real Pan-African minister who is going to be promoting jobs in the region and going against promotion of jobs in his own country. That's what has happened with this policy, with this measure.
Yeah. And how, one will say, how do we extricate ourselves from that?
We just need to reverse the policy announcement. We need to reverse suspension of lending. I think what I've said here, I would want government to exercise their minds. I know they've got pride, but I think they must sit down with the governor of central bank and verify the facts I've given. If this is true, that is 76% of the money is going to production. If it is true that government is pumping out $450 billion into the construction and agriculture, if it is true that the biggest demand for foreign currency is you and me, who is buying foreign currency for value preservation, why are you fighting the banks and the industry? Why don't you suspend those measures? Which country can sustain itself when the banks are closed? Are we not applying for us to get into the Guinness Book of Record of just killing our own economy by our own hands? I thought we were crying about sanctions. Are we not giving ourselves the highest sanction in this whole world? We have sanctioned ourselves as a country.
Okay. Like I said earlier, that we're going to be reading questions from you, our viewers. And let me say, please continue to send in those comments and questions. We're going to be reading them. I have a comment here, Prof, from Lakazet Laka. He says, please invite the RBZ governor and Professor Mugano to get this sorted. Why can't they listen to academics and be a bit inclusive? Costa Guatikunda burned the house because of the troublesome rate. Makanyanya Prof. Larissa says, Shandi, and they're laughing at what you said. The harassment started a long time ago. Those who sell coffee were forced to pick groceries instead of being paid money for their produce. Some of the comments that are coming through from our viewers and our listeners. Let me try to read some more, then we go into reactions to that. Wilson says, who then is advising our policymakers when the academics and economic professors seem not to agree with policy pronouncements and announcements being made in the country? Then another one, Chai, Zimbabwe youth register to vote. That's another comment there. Then Jimo says the government has failed. Listen to this man speaking. He is teaching us basic economics. The ruling government has failed. That 2 companies are going to close. More people on the street. We have been doomed. Go and vote next year. Some of the comments from our viewers.
Yeah, I think the central point coming from colleagues is that government must never ever make decisions when they are emotional. You only say emotional statements when you are at the rally. That's the right platform. In economics, we use demand-driven policies, we use evidence, we use consultations. In every country, even in South Africa, government consult their think tanks, which include academics. Harvard Business School is quite a big think tank for the American government. Our government is shy to talk to us. We are not shy to talk to them. That's why we are telling them what is wrong. And we are available to advise them. And this is what I am saying here, colleagues.
But Prof, you say you are available. You left a post where you were advisor.
Because they're not listening. How do you work with people who are harassing you every day and say, don't comment on media? taking your rights, constitutional rights, and you want to keep the chairman of Zisco, does it add value to my existence? I am an economist. I'm a Zimbabwean. I love this country. I should be free to advise government. If I had kept that position, I won't be here. I won't be advising the president that you are being misled by your ministers. And I enjoy doing that because at least I would have done my job of helping my country by being honest, by being factual. And I will tell you one day they will take these points when we are at the graveyard. They will think about these points.
So Prof, let's now look at how the economic outlook looks like with the measures that we've been talking about.
I think one measure, maybe 1 minute, which we have left, which I want to talk about, is the 4% tax on foreign currency. Then I will add it to the outlook. You know, the best way of encouraging people to bank the foreign currency is to take away any binding constraints or any impediments or any policy measure which is discouraging. So if I take my US dollars and I put in the bank, right? Then you say, when I want to transfer to you, I have to pay 4%. So why should I put it in the bank, that money, in the first instance? I put it under my pillow. Then I just give you cash and there's no government in it. And remember, we have 80% of the people holding foreign currency every day who are supposed to find the value of banking and foster financial inclusion, right? And by the way, on average, banks are making about 5% of that money, of income from foreign currency. The same banks were making about 35% to 50% of income from interest rate earned on suspended on loans, right? Now you have taken out the 50% income earned from loans, and you have taken out again 5% of income earned from foreign currency, and they have left them with the commissions, and we don't know what are these commissions. They could also be commissioned on the transfers they are doing, right?
Yeah.
So the first outlook which you must expect now is the total collapse of the banking sector. Because if at least 55 to 60% of my income is taken away by government through these measures, how are the banks going to sustain themselves and keep opening their doors, right? And then the second point in terms of outlook is...
Should we be afraid as people who use banks? Are we supposed to be afraid? Because if you're talking about...
What are you going to be using? There's not going to be any banks. If the banks cannot lend, you should just be guaranteed that there's not going to be any banks. So your fear is that what are we going to be doing without a bank? It means we are going to get an economic collapse. There's not going to be any economy without any banks, right? So the economic collapse is very imminent. It's only God who knows when this is going to be happening. The longer they take maintaining these useless policies, the 4% tax on foreign currency, the suspension of lending, right? Those two key. You can forget about others. You are guaranteed that we are just going to collapse. It's just a question of time. We don't want a month, actually. Yeah. We are just going to collapse because we have ever seen the price of cooking oil going for $7.50. Today we have seen the price of sugar going up because this is not working. And now you open floodgates. So we are going to transform this country to turn the profits of South Africa. And with which economy? So we're going to collapse. So we're going to see job losses. We are going to see company closures. We are going to see inflation running away big time because the external shocks will remain there. Remember, these policy measures never addressed the Korean and the Russia-Ukraine challenges. And those are quite strong factors in this economy. Now, they are adding poison also to the economy. How? Because fuel has gone up from $1.30 per liter to $1.71 per liter because of the crisis in Russia, right? And when the price of fuel goes up, you are assured that other byproducts in the chemical industry are also increasing. That's why you see fertilizers have gone up by 100% from $600 a ton to $1,200 a ton. It means also the pesticides and the chemicals which are using in agriculture are going up by 100% as well. This is going to continue to sustain inflation on an upward trend. The government did not close their own tap. they closed the wrong tab, which is the banking sector. They have not closed the budget, which is pumping money. So you are guaranteed the rate will continue to run away. So we are getting to a point, remember we said in June we'll be going for full dollarization. Now, you think people are going to be importing groceries from South Africa? They'll sell with the RTGS so that they're able to go and restock. No, they'll sell in US dollars because they want to hold the US dollar to go and buy again tomorrow. So when you do that, you are fast tracking dollarization. So it's going to happen.
You say banks are holding keys to closing their doors, and there are people who have money in those banks. Are we likely going to see withdrawals?
There's nothing to withdraw when it comes to RTGS because you can just take your money out.
Including some who have US dollars.
There are limits. There are limits from central bank. So the losers will be the mining sector because they cannot withdraw their money willy-nilly like you and me. But if it is me, I will be lucky to have US dollars in the account. I don't know whether I have money in the banks. This is the only country where you are going to work if no money in the bank. You just know that there's a bank there, but you don't have money. Do you have money in the bank? You're asking me a useless question.
I'll respond to that later.
Who has got money in the bank?
Yeah. So you say we are heading for a total collapse as an economy. And obviously, we can't fold our hands and just look. The things that needs to be done. If you say this government is not listening, what must happen?
What do you do? If you go on the street, they shoot you. If it was a country where we are democratically functioning, we would go to the streets to demonstrate for the good policies. It's our constitutional right. But who would go to the streets? You saw what happened when there was this pronouncement that we want to go shut down because the economy is not working, and there were police and the military and these people, what do you call these black boats everywhere, simply to go and deal with the people who want to tell the government that we are suffering. So what do? You just watch, because it's better to die of hunger than to die of a bullet. Maybe grace will find you along the way.
Let's assume that you are given an opportunity as a top economist yourself, an opportunity to meet the president and speak to the president about what's happening in the economy. What issues are you would you talk to him about?
Oh, lovely. That's a good question. So let me address the president, because I know he watches this program. Yeah. So to start with, I would tell the president that, Your Excellence, when you are addressing the economic challenges, I would want to go back to the medical doctor's approach, and I want to appeal to the president that any policy measure which is going to come to his office, he must be given a diagnostic report. Medical doctors don't cure anybody until they are satisfied that this is your ailment. So what is our diagnostic report as a country? Our central challenge as a country is, there are three. I would put them in three categories. And as professors and academics at the University of Zimbabwe, both in the business school and also in the economics department, we have this shared view that our three challenges, which I would want him to address as the president, is the first one is corruption. The second one is production. The third one is politics. So I'm going to start by addressing corruption. On record, we are losing 1.8 billion US dollars every year through illicit financial flows. And we also lose on average $1 billion locally, domestically. Because when I say illicit, I'm talking about money exiting our borders.
Yes.
But then there's also an additional $1 billion, which is being squandered when you look at Mildred Chiri's report. And sometimes you hear about 3 billion, but I want to talk about $1 billion. So those two figures, you have 2.8 billion US dollars, which is being wasted through corruption. We have no documentation with regards to how much money has been wasted through these arbitrage opportunities, where one takes money from central bank, goes to road port, and change that money, goes back again to auction system, get the money, goes to road port. That is massive corruption, which is killing production. So I would want the president and his team to deal with corruption decisively. And one way to do the corruption, particularly in the foreign currency, is to have one exchange rate. floating the exchange rate, then no one has got incentives of running around to change that money. In government departments, the parastatals, the ministries, it's a question of implementing what Madam Chiri has recommended so that we don't see continuation of corruption. And we have not seen even Parliament holding government to account. Then in terms of illicit financial flows, you need your central bank, you need your security agencies, you need your ZIMRA to close all those gaps of illicit financial flows. Now, let us assume that we put on table $3 billion on average, which we've saved from corruption. We can now go to production, to fund production. And we don't even need to go even to IMF and World Bank or to cry about sanction for that matter. Because even if we go to IMF and World Bank, they don't give us $3 billion every year. So we are losing that money. So this money now could then be used properly in production. So for example, if you stop the casino economy happening on the auction system, it means bona fide business people and the manufacturers are going to get foreign currency, and we are going to be seeing production picking up. The other way of also addressing production is to also take government out of the command agriculture. Remember, I've given you evidence of tobacco. It's a very practical model that when government is not in it, it's just providing a regulatory framework. Businesses can then finance through value chains. So we have already tested the model where agriculture can work without government. So let us borrow the commodity exchange approach, which has been used elsewhere in the world. Zambia, South Africa, Malawi, Kenya, they have a commodity exchange. So let the commodity exchange be the vehicle for financing through warehouse receipts agriculture and also marketing of agriculture. And GMB deals with the strategic reserve. GMB has no business of being a monopoly in trading of maize. These are the solutions we are providing, and we have shared with economists at the University of Zimbabwe that these are the solutions. I'm dealing with the production right now, right? Then the other way of dealing with the production is to make sure that we have the Minister of Finance and the Governor of Central Bank zipping their mouth for at least 6 months. Yeah, because what they are doing, whenever they are pronouncing sentiments, they are causing chaos. Check everywhere that they write on paper, they must not write anything. They must not say anything because they are causing chaos. Just this weekend, they announced what? Importation of goods. You are causing chaos. How are you going to be productive when you are actually punishing your own industry for the same policies you have announced as government on suspending lending? So, do you know the governor of Central Bank of Zambia? Do you know the governor of Central Bank of Malawi, nor of Mozambique, nor even the Minister of Finance of the same country? But ours is known as far as Somalia, where they talk too much. And when they are talking, they are spitting venom into the economy. So if they keep quiet, the industry can sort itself. Let them put the right levers, float the exchange rate if they want to continue with Zim dollar. If they can't, dollarize and go take a big step. They fine-tune the economy from a distance, and we have sanity in this economy. And I'm pleading with the president. These two gentlemen must just go on leave as far as talking is concerned, the Minister of Finance and the Governor of Central Bank, and issuing a statement.
Would you want to see them resign? Or?
No, that's not my take. My take is that they must zip their mouth.
Okay.
And that I'm very clear, because whether they resign or they stay there, if they come someone else who is going to keep on talking, we have problems.
So
because
zip your mouth.
Zip your mouth and not even issue statement. Put a system and leave it to work. Like how the board oversees management. You don't oversee somebody and keep on checking every day, and you are disturbing how things are working. But I want to talk about the last point, politics. Politics. What I want His Excellency to take note of is that we need a unified country with one team called Zimbabwe. And we don't want to see a situation where government deliberately punishes political elements, particularly the opposition. Because what must be understood from a quantitative figures point of view is that when we went for election, MDC Alliance, which was led by Nelson Chamisa, had over 2 million people who voted. which is a very big representation of the constituents which is supporting the opposition. Now, ZANU-PF also had over 2 million people who voted for it. So the biggest political parties in this country is the MDC Alliance. It's now Triple C. No, MDC Alliance is gone. It's now Triple C, right? And the ZANU-PF. So ZANU-PF must never fool itself to say they are going to lead and putting measures to disadvantage the others. Whether it's campaigning, they are discouraged from campaigning. Whether it's any arrest, they are being arrested for reporting thieves who are getting out at the airport with gold. What you are doing, you are developing a brand equity, which is very bad. And you have a country which is polarized. So when policy measures are being announced, you don't get the full support of the other side. You know, South Africa, what I like about South Africa, when they finish their politics, they deal with the government business. And even the opposition, they support the government. When you see a flight of South African government minister and the president going to China for business, the business community also chartered their flight to support the president because he is now the president of the country for the next 5 years. But here we have not disengaged from politics. From 1 August 2018, we began the politics before the results were announced, when people were being shot. And this is very dangerous for the country. Didn't you hear the parliament in UK last 2 weeks discussing the politics of Zimbabwe? And you know where the capital market is London, it's New York, it's Frankfurt, it's Shanghai. So if those markets are not trusting your political environment, you don't get capital. So the president might not understand this. And I respect him because he is an empowerer and he's a liberator. That's the right way to do it. He's a liberator. He went for the struggle and he risked his life for democracy. So I want the president to make sure that he's reminded of the work which he had done during the struggle to liberate this country. His systems, his government must never do what it's doing, what is happening now today. Because that is creating a toxic environment where people have drawn a line in the sand. And there's no way his government can lead when the other country is divided. So we want a sweet spirit as we go for the election.
So there you go, unified force for Team Zimbabwe to deal with the challenges that we are facing, challenges economically, political, and or otherwise. And let me say thank you so much to those that have been sending in questions. I see quite a number of comments and questions coming through. Unfortunately, we have run out of time. I would have read most of those. But let me assure you that Economic Pulse is coming back next month, where we're looking at the performance of the economy. We want to listen to the pulse of the economy to say, is it pumping correctly? And to help us do that will be Professor Mugano. Let me also say that we'll be bringing other commentators on the show to also give us insights into the economic performance of our country. My name is Perfect Longwane. We meet again next time on the program. Thank you so much, Professor Mugano, for your time.
It's my pleasure. Thank you, Zimbabwe.
Thank you.